Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in a little bit. Just want to talk about markets and the coronavirus and hopefully calm some people down a little bit, because I can definitely feel tension and fear starting to pick up out there. Just some observations. The past 2 weeks I've been loading up on supplies, always preparing for the last worst case scenario. And once I have that plan in place and enact the steps to get that plan set up, I don't think about it and I don't have to stress about things, but I feel stress from other people. So I've been going to different places, Whole Foods, Home Depot, wherever, to get things that I need, and just observing people as well. I'm watching what they're doing. I'm loading up my cart with canned food and frozen goods and all this stuff, so I don't have to leave my house for a month if that ends up being the case. Multiple months, probably a year at this point in terms of supplies, but nobody else was doing that except for 1 or 2 people every time. Today was a much different story. I think that has a lot to do with, number one, the market continues in free fall. Everybody's hearing the headlines. Number two, Trump's talk to the country yesterday. But today was very different. More people buying the frozen and canned goods, and you can feel the tension in the air. And I've been stressed the last few days. I personally am positioned very well economically, growing my own food, not having my retirement or really anything. I'm all cash right now and just patiently waiting for a dip buying opportunity at this point. But I feel the stress from the collective, and it's important that we find ways to combat that stress for multiple reasons. Number one, it lowers our quality of life. Number two, it lowers our immune system. If we do want to be fighting off the potential to catching this virus, we want to be as healthy as possible. For me personally right now, I'm just taking it really simple. I'm not going to a show. Here Come the Mummies is a great funk band. They're coming, and I am foregoing. I already bought the tickets, but I'm not going to go to that show in a week. And the reason is because there's going to be hundreds of people there, and I'm just trying to limit my exposure. I don't think I'm going to die from coronavirus. I think I'm very fortunate to be healthy, and I think that my body would do a good job of fighting it off, but I don't want to spread it around to other people. And I know that there are certainly people that are immune compromised in this current scenario. And we have to be cautious of those people because they're going to be the ones that are hurt the most. So changing lifestyle. For me personally, I'm taking a daily regimen of vitamin C, mushroom extracts, some zinc, some elderberry syrup, some fire cider. There's a lot more than that, but just a whole slew, oregano oil, just a whole slew of things that can help boost our immune system, and avoiding contact. Obviously, the washing my hands more, not going out as much. Those are just little steps that I personally am taking. With regards to how the markets are reacting right now, they are pulling off the Band-Aid in a certain sense, where it's getting the ugliest out of the way early, in my opinion. The rate at which we are dropping. And all you gotta do is look at the weekly time frame to see what I'm talking about, where it's just a waterfall straight dump. And at this point, that waterfall straight dump with no bounces aside from one daily lower high and lower low is a 26% drop. And if we go back to 2008 and see how ugly was 2008, some people are starting to say this is going to be worse than 2008. The ugliest drop that we got that was in a waterfall fashion was 36%. So again, we have to look at history and remind ourselves, yes, it can always get worse. We can always see another leg down, and that has to keep us cautious when we establish our game plans. So I personally do have a game plan of scaling in some longer term positions, but every time we see a bounce, I am going to reposition that game plan. I'm going to pull my bids and position myself to have as low risk as possible. So an example of that is I did this 2 weeks ago. I started scaling in and only had 1 of 4 potential entries fill, and it filled on the bounce day. And then as soon as we lost the hourly uptrend on the bounce, knowing that a daily lower high was coming, I exited that position and locked in profit. If we had held a daily higher low, I would have re-entered. Had we changed the hourly trend on March 6th, I would have re-entered that position. Fortunately, we didn't, and then we gapped down below support, so I never had a chance for a re-entry, but I would have re-entered and then put my stop under 285, and at that point, it would have been a zero risk position because the profit that I locked in on the way up would have been greater than the risk had I stopped out. I will always have a stop level. I'm never going to just blindly scale in because I don't have enough trust. I mean, if you've been watching these videos on our YouTube channel for the last 5 years, you've heard me say a dozen times, I don't have trust in our government and financial systems. And fortunately, in times like this, it protects me. In times of euphoria, the S&P 500 beat me in 2019. And that's because I was not trusting enough of the system to just put all my money in long positions and not touch them. I'm constantly day trading in and out. Give me my money. I don't trust holding you overnight. And it's now in times like this that I'm going to beat the S&P 500 this year, and it's keeping me protected. So in some instances, it definitely hurts, and in some instances, it helps. But with where we stand right now, again, every single time we bounce, prepare for the potential of another leg down. And I feel that fear will increase once we see a temporary bottom, which I feel is coming soon, a temporary bottom and a bounce, even if it's just for a weekly bear flag. If we see a weekly lower high and lower low, you're going to see the fear spike a lot. And if you're just observing human emotion and the media and friends and family, which is what I'm always doing and factoring that into my trading, this break of this low saw a huge spike in fear again. Because if we had held that low, then we would say, oh, maybe a V-shaped and the all-time high is not far away. Bulls can get out of this. As soon as you see the lower high relief and lower low, it tells you what's going on with supply and demand. Supply of shares outweighs demand. There's demand at the beginning, then we have people having their second chance to bail on their long positions, and we have shorts re-entering or entering for the first time for a lower high. And the supply of shares outweighs demand, and we drop to the lower lows. So as long as that keeps happening, the bears have complete control, obviously, in the downtrend, but it's the free fall where I'm comfortable beginning to scale in, knowing that the short-term scales flip, where everybody that's going to go bearish has already done so at a certain point, and everybody that's going to sell long positions has already done so, and there's people looking to buy dips. So say we close here right now, not much time left at the end of the day here. If we gap down tomorrow, I'm starting to scale in because it's that waterfall. And let's say I have my first entry at 248 and a second entry at 238 and a third at 228. And let's say we waterfall all the way down to 225. As soon as we start that bounce, any bids that did not fill, I pull those bids. I don't want them there anymore because it's not the same scenario because we are no longer in free fall. And I look to position myself on the bounce. At that point, my break even would be 238. And what I would do would be, if it takes a 5% plus bounce to get me to 238 break even, I'm going to exit half of my position at break even to lower my exposure and to free up that cash again, knowing that on any bounce that we see from these levels, we are just looking for a daily lower high. There is no need for any FOMO because I can always look to enter on the higher low and use the low as my stop. So if you miss the initial bounce, no FOMO, because there is tons of space for it to just be a lower high, and we can look for the higher low if we really want to enter a bullish position. So that's my longer term game plan. Again, I'm watching for a major news climax to potentially help me get a bit more aggressive as a bull. I want to see maximum fear. I don't want to see it, but that's what I'm waiting for in the market. So again, if you see some major cities get quarantines in the US, or if you see President Trump diagnosed with coronavirus, whatever a max fear headline that, again, is going to get those scales tilted, where, okay, that headline came out, and now there is nobody left to short that hasn't already shorted, and there is nobody left to sell long positions that has not already bailed, and that's when we bounce. So that's also something that I'm paying attention to in the news for a climax-like story. Stay protective. We can always see another leg down. Always tell yourself that. Right now, the marijuana sector is getting absolutely demolished, and there are people 30% ago that thought we couldn't go any lower. So remind yourself that this is, in my opinion, the way I treat these markets, they are numbers floating in cyberspace. They have no attachment to reality. It's all perception. If things are great, things can be worth $100 billion gajillion dollars. If things are fearful, then things can be worth $20. It's the perception of the collective that determines what things are worth. So get out in nature, clear your mind if you want to reduce stress. Markets don't exist in nature. Markets are human made, and when I'm in front of the computer, markets are everywhere. And when I go out into nature, there's not a market around for miles. And that helps me ground down and realize that it's all a game. It's always been just a game. And for some people, this game means everything to them. And for some people, it's just a game where it's not the most important thing. The most important thing right now is we're still breathing. We hopefully have some friends and family that we enjoy hanging out with. We have things in life that we enjoy doing. And while, yes, money can help us enjoy some of those things and can help us live a less stress-filled life, it's not the most important factor. So as always, protect yourself. Establish game plans. Do not act on game plans on the fly, because that is when you are acting on your emotions. And that's why even long-term positions need stop-loss levels, because right now there's a ton of people whose game plan was to just hold in this market until retirement, and now they're saying, should I sell? And they're probably going to sell right near at least a temporary bottom, because that maximum fear is going to kick in and cause them to sell when it is almost right near that temporary bottom. So that's just my rambling thoughts. I hope you all have a good day, and detach from the markets as much as you can, and remind yourself they're just numbers floating in cyberspace. Have a good day. We'll see you soon.